Good afternoon, team. Happy Friday. Man, we're going to go through mortgage rates today. Number one question I get as a loan officer, of course, is what are rates today? What are rates today? What are rates today? I'm going to do this more and more often. I promised that I would this year, and I'm going to continue to promise that and hold myself accountable to it. Haven't been feeling good the last couple of days. Obviously need a haircut, but hey, it's never too late to check on rates. Even when it's late in the day on a Friday, a lot of these banks will honor locks over the weekend. But by this point in the day, the market's closed, the hedge has been put in. So I want to preface that. There's a hedge that's put in at the end of the day that allows you to lock with some banks over the weekend. Sometimes not all the best banks, but it is doable. But if we look at rates here, it's very realistic. Even if we open up with bonds, if we open up poorly on Monday, we should be about where we're going to show you here in a second. Speaking of bonds, we'll look at that bond chart in a bit. As you can see, bonds are on the decline. There's a new very steep, look at that. There's a very steep downward trend here with mortgage bonds. And of course, we want bonds to go up because that's what makes mortgage rates go down. So not looking great as far as that concerned. But as I've warned you, rates are going to go up this year. It's pretty much a foregone conclusion. Today, we are going to look also at jumbo rates, which I normally don't look at, but I quoted a jumbo today and surprisingly looked really, really good. Really, really good, even versus like a high balance conventional loan. So we're going to look at that. On the screen, you'll see new graphic time, new graphic alert. Submit your scenario. If you would like a rate quote, all you need to do, you can email me, you can text me. I need loan amount and either the purchase price or the home value if it's a refinance, purchase price if it's a purchase, credit score, and then whether it's a condo or it's a detached house. That's it. Send that to me, and you'll see exactly what I'm going to pull up right here. You can send that text or email. And you're going to see this right here. I'm going to plug it in. So we're going to start with VA. We're going to do VA, FHA, because those are going to kind of compare against one another. And then we're going to look at conventional and jumbo. Now, I'm a broker, NMLS 155010. And so we're pulling up banks here that we have through Loan Sifter, which is a program that organizes all the different rates from the different wholesale banks. So let's take a look here. We're always going to look at the conforming balance, which is under 647,200, and we're going to look at loans over that so that we can get a good feel for what the difference is. Usually it's about 1/8%. Sometimes it's 1/4%. I'm going to use 780 credit. We're trying to keep all these things consistent. So when we go back and we compare, we can really see how the market's moving with respect to how bonds are moving. So this is going to be a conforming VA purchase. So under 647,200. And as you can see here, 3 1/4. So 3 1/4 is there today. All right, 3 1/4. Now with these sheets, we have note rate here, APR, and then you'll see here either lender credit if it's in green, or the cost for that rate if it's in red. So today right here for this one would be 3 1/4, and there would be a $2,300 credit that would actually go to the buyer. And we're pulling up purchase rates. We go $2,300 credit would go to the buyer. So we're not charging any fees. We're not charging any points. And the buyer would get a $2,300 credit for that 3 1/4. Pretty cool. That is pretty cool. In fact, I just locked one very similar to this moments ago. Now let's jump up to high balance. So we're going to take the loan amount above the 647,200 and see how that looks. Now, so we're at 3 1/4 with a nice lender credit. Let's see how much this goes up. Will it go up to 3.5, 3.75? So it jumps up to 3.75. So a 0.5% difference here. And people always ask, why is there a difference there? Why do rates change when you go to that high balance level? And the reason it's fair housing stuff. So the government doesn't want banks to just focus on the big loans and ignore the people who need small loans because they can make more money on a bigger loan and it takes the same amount of effort to process as a smaller loan. So of course, bankers being what they are will tend to gravitate towards the high balance. But if you don't have a balanced amount in your portfolio that you're selling to the government, then they'll penalize you. And that's why, and especially when prices are up like they are right now, a lot of banks are penalized for it. And that's the reason why you're seeing this big disparity. So from 3 1/4 to 3.75, also a very big lender credit here, almost 70 basis points. This would probably make sense to buy it down to the 3.625 for $1,100. But either way, we're going to always quote the par rate. So 3.75 with about a $5,000 lender credit. And in that case for this buyer on the high balance VA. Okay. Let's go to FHA. Now, VA and FHA, both Ginnie, May, and so we always look at these two together back to back to try to see, how different they are. Are they similar? Are they running differently? They should be pretty similar. Last time, I was very surprised the FHA was in better shape on the high balance than the VA, and I'll bet you that's going to be the same this time, just based on looking at that. So here we go again. CMG wholesale coming through with a 3 1/4, and you notice how they're the only one. And this is the reason why it's nice to not be married to any one rate sheet. You see that? Like there's a lot of times there's just one bank that's really the perfect bank for that buyer or refinancer, and that's who you want to connect someone with. So being a broker allows us to do that. So 3 1/4 here for the FHA conforming balance with a nice lender credit. Let's take it up a notch. Let's go to 800,000. And let's see, what's the mental math on that? What do we need, like 30? Oops. Oh, that's too much. Let's see. So 3% would be 24, and then 0.5% would be 4, so 28,000, so 772. How about that? Boom. Okay. So this is going to be high balance FHA. All these rates are no fees, no points. 3.375. Look at that. Loan Depot wholesale coming through. And someone asked me one day, they're like, well, I saw that the best rate was with loandepot.com LLC. I can just go to Loan Depot. I don't need to go through you. You can, but I would encourage you to check it out. Like check out my rate with Loan Depot and then go to a retail Loan Depot and see what their rate is. Their rate's going to be higher. They have more costs than I do. They just do. That's why it's wholesale. But anyway, it was a good question. So you'll look here, 3.375 with a little lender credit. But hey, 3.375 for high balance FHA. That is really, really, that's good. That's good. I know we're not at 2 1/4 anymore. I know we're not at 2.5 anymore. 3.375 is not bad right now. This just shows you, although rates have been under extreme pressure, they're still in really good shape. All right, now let's go to conventional. And while I'm doing that, let's put this up on the screen. Hey, submit your scenario. You want to find out what rate you should be getting, whether you have already got a quote from someone else or you're just curious. Give me that information. You can email or text it to me, and I will tell you what's up. What should the rate be for your scenario? And if I can't do the loan for you because you're in a different state, you can at least take my rate sheet and go shop it around in your state. Try to find out what's going on. Okay. All right. We're searching now. We're at conforming limit conventional loan. So under 647,200. Loan Depot's at the top there again. Florida Capital Bank making the waves. PennyMac's in there. Pretty much everybody at 4 1/8. 4 1/8 with little credit. But see right here how this goes to 3.99 for $513. You got to take that. Okay, you got to do that. And here's the reason why. You got this 2763. It would be the P&I payment on this scenario. 2718 if you pay $513. So that right there is a $45 a month savings. So you're going to get that in less than a year. You're going to get that back in less than a year. So you would take the 3.99 here. I would talk someone into that just because it's such a no-brainer for them long term. And it's only $513. You're buying a house. You can afford to make $513 wise investment into your situation. But I always quote the lowest rate with no cost, right? No points and no fees is what we promise. The points are only there if you want to pay them. If you want to pay the 3.99, pay the $513 to get 3.99, you pay those points, but you don't have to. If you take the 4 1/8, you're going to get $2,400 in this scenario towards your closing costs. So that is conforming balance, conventional loan. Now let's go to the high balance. And I'm really curious to see this and compare it to jumbo right now, especially after the quote that I sent out today on a jumbo loan, which I was like, wow, I think it's going to actually end up being better. And you can use these jumbo lenders for conventional. You can use jumbo lenders and use jumbo loan products for conventional loans. P.S. There's a couple of hacks out there in the loan space, and that's one of them. Another one is if you have a lot of money and not a lot of income, you can buy a house Actually, no, I'll save that one. We'll save that one for another video because it requires an explanation. Okay, visual purchase. Come on, Loan Sifter. The one thing about technology, right? We rely on it. Literally, if this doesn't work, I have no idea. I can't tell you anything. So we're trying to do high balance conventional here. 780 credit. Just 5% down. I'm doing the minimum down on these. 4.375 today. Spread looks pretty fair. Probably a decent investment into buying this one down, maybe 1 or 2/8 tops. But at 4.375, you got a 658 lender credit. And that's not too shabby. 4.375. Okay, so let's keep this in mind. 4.375. Now, let's go over here. Going to show me? No. You know, jumbo pricing might be tanked for the day, but let's just go and look anyway. I might have a live scenario coming through here. Or not. Okay. So let's go jumbo. The one I quoted was 1.4 million purchase price and 20% down. Let's take a look at this. Yeah, 4%. Look at that, JMac. The Laguna Jumbo. Yeah. I'll take all the money, please. What a smoking deal that is. Look at that. You saw it. You saw the conventional. 4% on the jumbo with a lender credit. Wow. That is just smoking. Smoking. 4%. Okay. And the buy down options there aren't bad either. That's a very big loan. I mean, you almost have to take the 3.875 there and save you $80 a month. You'll get that back in no time. Yeah, I mean, anything under 48 months to me is a no-brainer. Wow. That is cool. So there's some jumbo action. So, you know, decent credit, 20% down, jumbo products. There's also a lot of jumbo products out here with, you know, less money down, which aren't as sexy, honestly, pricing-wise, rate-wise, but they're there. You know, they're there. You can definitely get them. I'm going to show you a couple of other things as well. Just want to put the information up again if you want to submit your scenario. I'm making myself available for this, even over the weekends. You can email me. You can text me. This is the information I need. Loan amount, the purchase price or the value of the home if it's a refinance, credit score, and whether it's a condo or a detached home. That's it. If you want to include your state, that's also helpful. But that's all I need to basically submit to get you a quote. So you know, hey, even if I can't do the loan for you, here's what you should be expecting. You should expect this. If someone's charging you more than that, then you need to ask questions. You need to shop around. All right? Now I'm going to give you a couple things here. I'm going to put a few different things in this particular video description because there's obviously a lot of interesting things going on. And I just think it's important to know, and I like to hear things from the horse's mouth. Like I hate these stories that prognosticate or say, oh, an unnamed source or whatever. I'm totally cool with hearing it directly from someone. In this case, Treasury Secretary Janet Yellen says that Americans will likely see another year of very uncomfortably high inflation. She said very uncomfortably high. Now, for months, I've been telling you to batten down the hatches, review your finances, try to trim expenses, be smart, be wise, look at your portfolio allocation. The stock market has done nothing but tumble down since we've been talking about that. And that's going to continue. The real massacre hasn't even happened yet. I did think there was one more leg up before it happened, but I don't know if that's going to take place or not. Sure doesn't seem like it. So be careful. Read this. Believe it. It came from her. I mean, she's basically getting in front of this. Hey, it's going to be bad. And I think the reason we can trust her on this is because this is not a statement that is biased toward her betterment. This is a statement that we have screwed up. Things are going to be really bad. So you can tend to believe those kinds of things more often. Goldman Sachs predicts what will happen to Europe's economy if Putin shuts off the gas taps. This is something that could come into play as there is a trickle-down effect here. There's problems that can roll down to us here from Europe, from Russia. There's more stuff here than I would like to see, to be perfectly honest with you. Some of the stuff's really concerning. I'm not going to go into in great detail, but I suggest you read this. Do your own research. And it's Goldman Sachs. Can you trust Goldman Sachs? No. Can you read it understanding that, hey, they might be trying to angle me here? Yeah, read it with that in mind. Someone was asking me too, I went ahead and pulled this up about foreclosures. A lot of people who are in this market, a lot of people who are in real estate, in mortgage, they were not around for these times back here. You know, we're talking about 07, 06, 08, when things got really bad. 09 was actually the absolute worst point in time. The stock market bottomed in March of 09, I believe. And so that's early 09. So that's somewhere around here. And we still had bad foreclosure data for quarter after quarter after quarter for a long time. And then it finally started to kind of fell off the cliff there and then declined for a while. But you can see where we are now. The foreclosure data just down here, it's down kind of right where it was. If you go back into the early 2000s on this side of the map, you would see it over there. But, you know, the question is, will there be, you know, will foreclosures cause a problem, you know, things like that? Listen, even back, okay, the real estate crash that happened that was caused by the mortgage industry, Wall Street particularly, the bond ratings agencies, we got lots of warning shots. Guys, there were a lot of warning shots that went off, and that was an absolute worst case scenario. We have no warning shots right now. Like, this really isn't even a topic of conversation. Honestly, I know I'm bringing it up a lot because everyone's so worried about it, but the fact that everyone's so worried about it is kind of a reason not to be worried about it. It really is. And this is such a non-conversation right now. I mean, look where we are. This only goes to the N19. It's right similar in there right now. We aren't there. There's no, and by the way, we could really use the inventory if there was a spike in foreclosures. But just like we got tons of warning shots on this, and you do, and things take time. Like when foreclosures started spiking, look, it started happening here in 06. This was a red flag. This was a warning. It continued over here. I remember hearing about them in early 07, like, wow, they're really starting to get bad. They're starting to freak people out. There was plenty of time. Everyone could have seen this coming. Everyone was so blinded. People aren't blind anymore. We aren't blinded by this anymore. There's a lot more skeptics out there. There's a lot more cynicism, frankly. And we will see, if there is trouble in real estate, we will see it coming from a mile away. And I am staring at it like I'm looking into the sun. And I'm telling you, it's doing me no good. There's nothing there. There's nothing there. Literally, there's no homes for sale. There's tons of people who want to buy them. There isn't anything to be worried about in this, but I'm going to include this link. You can find more. This Atom data site is really, really good. There's tons of information on here. If you want to find more, just go there. Check it out. They have other graphs too. So if you want to look into that, don't have to take my word for it. Check it out. See what you think. Everybody have a great weekend. And remember, if you want to get a quote for a loan, all you got to do, email, text me, loan amount, purchase price, or the home value if it's a refi, credit score, whether it's condo or detached. Submit your scenario, and I'll go back to you as soon as I can, even over the weekend. Have a great day, and I will see you all soon.